The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. What the heck was that coming out of my voice? Hey, welcome to the October 28th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I hope that everyone is off to a great start of their day. Let's make sure that you and I, that we do everything we humanly possibly can to have an extraordinary day. Let's make sure that we also remember that everything in life happens for us, not to us. If you live that way, that is a beautiful way to live. You know, another way to live is to pick up your phone and dial me at 877-927-6648. I would love to hear your voice and assist you in taking a look at the stock charts. Maybe you're looking at things differently than I am, and that would be a beautiful thing out there because there are bulls, there are bears. Internationally, you can reach us at 727-445-1044. Remember, if you've got a question, I guarantee you somebody else has that same question. So don't do it for yourself. Do it for one of the tigers or tigresses that are listening in out there. That's what's called a random act of kindness. It is a terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow. It's trading up 61 points, trading out to 16,878. S&P up 11, trading at 1972 and change. Composite up 44 points, trading at 45.29. The Russell 2000 up 14, trading at 11.31. The DAX over in Germany, that's up 157 points. The FTSE up 37. Goldilocks is flat right now. Silver is up 6 pennies. Light sweet crude is back 37 cents. She's trading at 80.63. The U.S. dollar index, that's off about 141 ticks this morning. She's headed lower, much, much lower. The euro yen on its move higher. The euro headed higher. The Japanese yen is... it should be heading lower here. The Great British Pound trying to bake out of a trend out there. To the upside, big movers in the marketplace out here this morning. Receptos Inc., that's up 40%. Buffalo Wild Wings, that's up 9.5%. Tesla up 4%. Madison Square Garden up 11%. Amgen up 4.5%. Parker Hannifin up 5%. Cummins Inc. up 4%. VIP Shop Holdings up a couple of percent. Amazon, well, take a look at Amazon. We haven't looked at that. Trading out at $294. It's held that long-term level of support out there. That's up. And I think Amazon has found its bottom. United Therapeutics is leading the charge to the downside. She's off $11, off 8%. Twitter off 13%, down about $6 and change. Sanofi off 10%. That means it's down $5. Kohl's Corp off 7.5%. Metadata Solutions off $4. Martin Marietta off $3.70. McKesson, which has been a real strong-looking stock out here, it's off $3.69. Dorman Products off $2.78. Commvault Systems down about $3. Again, our call number 877-927-6648. Let's go take a look at some of the intraday charts, and we'll take a look at things moving and grooving out here. We're going to start with the NASDAQ. NASDAQ, as we take a look at it's right now, it's potentially, and I just say just potentially, we got to let this is a 30-minute chart, by the way, that we're looking at. What we can see here, it's in the process, this last 30 minutes here, moved higher with a little bit less relative strength out there. Now, it's a big candle, so pretty tough for us to see a reversal. We could, but if we did see a reversal, it shouldn't be unusual for us. We're starting to get here. If you take a look at, yesterday's retracement in the market, pretty shallow, right? Very shallow. If ever there was an opportunity to sell off, yesterday was certainly it, and it did not do that. And if we take a look at the NQ, it just made about a 50% retracement of its last move. If we take a look at what would that mean right now for the market here, I don't have the 50% line on here. I can always, we can guesstimate it. If we go from the last swing point low to the high out here, it says probably right around the 4,040-ish type area would be where price could pull back to. I'm not saying that it's going to. We're just looking for potential. We're looking for patterns that we need to pay attention to as we speak right now. And price moving higher on less relative strength out there, that's one to pay attention to. You need to see a reversal signal. We also know that coming off of that same low out here, and that was at 10:30 yesterday morning, it's made potentially a seventh wave up. on its pattern out here, so that's something to pay attention to. It's either the seventh wave up or it's just the third wave, so we don't know which is which, but we'll try to put all this together. Hey, you've got the TAS market profile resistance level. That should act as support. That's at 4,063. So any 6-point give back here, if you see price get back below 4,063, that says, okay, maybe we got the next retracement that would be coming. Not that the top is in. No chance, no way, not that the top is in. Just simply that we're looking at some kind of retracement out there. That's the message of a 30-minute chart inside of the strong indice. I don't know what to choose anymore as the weak indice out here. Let's take a look at the ES Mini on its 30-minute chart as well. The ES Mini on its 30-minute chart, and this is back at 4:30 this morning, it had one big little thrust to the upside here, and that may have been a seventh wave, maybe a fifth wave on the way up. No price relative strength divergent patterns. What we can see here is that the price has found resistance at its TAS market profile high. So that's all we know, is that 1968 level is a pretty significant resistance for the ES Mini, just as 1961 is pretty good support. How do we know that? Well, if you take a look at the 1961 and a quarter level, that's the support level for the TAS market profile low. And the actual low that we saw coming in here at 9:30 this morning, I don't know, how does this work? 1961 and a quarter. So right now, price has just simply gotten back to its fair auction level. It's a point of control right in that 1965-ish type level. So the ES Mini on the 30-minute chart here, really not giving you much information other than it's consolidating in between these TAS market profile levels. So that's plenty of information, though, right? We know it breaks out above resistance, it's off to the moon. We know it starts to break down below support, then we start looking at retracements. Where would be retracements that you would look at? I heard somebody ask that question. I'm going to give you the answer to that. And that answer, if we just take a look at normal Fibonacci retracements, we'd go from the most recent swing point low to the high out here. You'd say it pulled back maybe to 1953. Somewhere right around that range would be what you would be looking for inside of the ES Mini on its 30-minute chart out there. If we go take a look at, what's that sound? If we go take a look at the Dow on the 30-minute chart as well. The Dow on the 30-minute chart, this shows us what? This shows us that it's trading below its market profile low out here. Now, its market profile on the 30-minute chart, this area should have held as strong support. So 16,815. So of the weakest of them all as we speak right now, of at least the three that we've looked at, we're going to go look at the Russell as well. The Dow is a little bit weaker. It sort of makes sense, right? I guess if there's been a weak link out here, it's been in the Dow. Now, is it really so substantially weak? No, but it has broken through a support level, 16,815, and we've seen price come up and test that area and reject it. Right? When you break an old support level, it then becomes resistance. That, in essence, is what we have seen take place since that level was broken at 9 o'clock this morning. So the Dow is acting a bit weaker. If you were one that was going to short the market today, or if we're going to see some weakness, I would have to say the Dow is the place where you would look to do that. Now, what are we going to look at as far as potential pullbacks inside of the Dow? And as you know, I believe a major market bottom has been put in the market. If you don't necessarily believe that, go listen to the 9 o'clock show out there. I think I probably made it relatively clear, at least with regard to my conviction. So if we take a look at where could the Dow retrace back to, you'd have to say maybe 16,724. 0.68 retracement of this last move up. At least that's what I would be looking for out there. So the Dow so far, the weakest of the three that we've looked at. If we go take a look at the Russell 2000, I don't think that this is weak. That's leading the, is that leading the charge here? Let me switch over. Let me see percentage-wise this morning. Who's in the lead here? Yeah, it's Russell 2000 up 1 2/10%. Now, the Russell 2000 over the last several days has been since October 14th or 13th out here. If you start tracking the number of days when the Russell 2000 has led the markets, it's a preponderance of days out there. And the sign of a bullish market, look, if the Russell 2000 on its own is not going to take the markets higher. But if you want to know if you're really in a strong leg, you're in a strong bull market, you're going to see the Russell 2000 and the NASDAQ leading the charge. And that's really what it is that we have that is in place out here. Now, the 30-minute chart here for the futures contract, I've got a 10-minute delay on it. Yeah, 10-minute delay because I don't want to pay those exorbitant fees out here. But when we took a look at the index, there's not anything there that's negative that's going on. So if we take a look at the 30-minute chart here in the Russell candle, super strong, because if you come off of the same low, 30-minute chart, 10:30 yesterday morning, you'll see it blew through its seventh wave on the way up out here. So never was there really much of a retracement at all. In fact, it'd be pretty hard to figure out where you're going to go and truly start your next lettering sequence out here. I think you'd have to just say, in the case of the wave counts on the way up, you just simply have to come to instant restart kind. So, maybe in your fourth wave out here as we speak right now. No price relative strength divergent pattern. The Russell 2000 is just simply strong. And that's what, so look, those are signatures of bull markets, of strong legs out there. And so anyway, so that's where we're at in those shorter term time frame charts. If we look at let's go look at the 5-hour energy drink chart patterns out here for each of them. Let's do it in reverse. Let's take a look at the 300-minute chart here for the Russell 2000. It's got what it has done here recently is it's broken through its market profile high. That's at 1117.30. 1117.30 should be pretty good support for the Russell 2000 and any kind of intraday pullback out here. That's on its 5-hour chart. If we go take a look at the 5-hour chart here for the Dow, remember the Dow was the one on the 30-minute basis that was a little bit weak out here. We got a little shooting star candle that took place here at the 9 o'clock session. So that was from 4 a.m. to 9 a.m. That alone is not a reversal signal. Now, in the case of the Dow, and we come back off of the actual swing point low, that was at about 5:15 in the afternoon during that session. That was back on October the 15th. That really becomes the beginning of where your wave count on the way up. If we take a look at A to B equals CD patterns as well out here, let's put that in here off of that same swing point low area. There's your A point. Let's take a look at the B point, your C point out here. So it's done the 1-to-1 A to B equals CD to the upside. That price projection was 16,792. You're trading out right now at 16,769. So you'd have to say from an A to B equals CD standpoint, that could be, it could be tired. It could be a place where it starts to find that it needs to rest for a bit. Now, if we take a look at wave counts out here and say, no, not really, it still wants to move a bit higher. So until the I don't know why I can't get the Russell out of my head out here, until the Dow futures really start to get below 16,769, that's the 5-hour chart, right? So we saw weakness on the 30-minute chart. If we take a look at the 5-hour chart out here, that 16,769 becomes a pretty good level of resistance out here. Which is now support. Old resistance, now support. That is on the 5-hour chart. Let's take a look at the 5-hour chart here with about 15 seconds inside of the ES Mini. Let's go see what it is doing out here. This may have formed a price relative strength divergent pattern. Now, this next session doesn't end until 2 p.m. this afternoon, so it's got a lot of work to do. It's trading above its resistance level, 1962.35, which should become new support out here. Trading at 1965, even Steven. That's taking a look at the Dow, the ES Mini, the Russell 2000, and the NASDAQ. Of course, I'll go ahead and put that NASDAQ chart up on our screen out here. 5-hour energy chart. Says it's got lots of strength, lots of vigor. It's ready to roll tide. This is Steve Rhodes. This is TFNN. Dow's up 51, S&P up 10. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Think or Swim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 38, S&P up 8, composite up 41 points. During the break, was just chatting via text, I suppose, inside our Tiger's Den out there. Hey, if you've never had a chance to test out the Tiger's Den, come on over to the homepage at TFNN.com and check that out for the next 30 days. Extraordinary group of folks inside of the Tiger's Den. We were looking at Amazon. Now, in the case of Amazon, until breaks its trend line, my opinion is that Amazon has formed a major bottom out here. Now, when we take a look at Amazon, pretty impressive. You have to admit, very impressive with regard to the revenue figures out here. Yeah, the profits, because it continues to just simply reinvest, wants to control the world out here. That is what it's really all about. If we take not necessarily what it's all about, but that's what it's all about for Jeff Bezos. If we take a look at their annual income statement out here, and I just go back to 2010. Look at the growth out here. These are big, huge numbers out here. These are, in billions of dollars out here, or 30 more than billions. I don't even know how to. Just if you just take a look at what the actual, maybe it's 342 billion. Or something like that. I can't enlarge that out, but let me just tell you, we're going from in 2010. I can't enlarge it easily, but 340 went from 342 to 480 in 2011 to 610 to 744 this year, and we're not even into this big quarter. Its big quarter is December, the third quarter out here. It's going to blow away annual numbers on a gross basis out there. So it's blowing away the top line. Now, here's the chart really to be paying attention to. And this is a monthly chart for Amazon. And what I can say is that months and months and months ago, many, many months ago, when Amazon first started to crack, I was taking a look at this chart with folks, and the question was, where do I think Amazon could fall to where it would be a nice buy point? And what I did was I put it on a larger term time frame. I said, I don't know if it'll ever get back there, but if it did get back there, that there being the bottom of this rising trend line, that would be your spot where it would be a buy point. Now, that trend line that we're taking a look at takes you back into the 2008 time frame. And from a channel standpoint, what I'm using is the actual body of the candle. In this case here, the wicks aren't large enough for it to really matter, with the exception of the wick from this month. But I'm not really, those channel lines were not formed because of the wick of this month. It's just that the wick of this month happened to stop right at the bottom of that channel line. So the low in the 284 level, so it happens to be 284 even Steven as we speak right now. I have to ask Basil about round number lows. I know we always focus on round number highs out there. But the point is, until the Amazon, so if you were to go back, and this is, as I say months ago, could have been March at least, could have been February of 2014. And so we drew in there inside this chart, where is it that Amazon, where would it be a good buy point? And that was, hey, at the bottom of the trend line. That's what Amazon did after the release of numbers. It's bounced off that area. Nothing substantial. You're trading at 294 right now versus 284, but that's a really important channel line, trend line out there. If we take a look at a daily chart, I'm not saying go ahead and jump in. If you were looking to buy Amazon, if you were from a long-term trader and you believed in Amazon and you were looking for a place to go ahead and buy Amazon and put into your portfolio, I would tell you you're there. And I would also tell you to go ahead and use stops. That's all that one can do. You've got to be able to, take whatever trade it is that sets up and use stops. Yeah, it's got major volume down there. No question about it. That volume on that trading session was October 24th, and there was, 19 million shares, down there. Does that scare me? Look, the larger trend is really what it's all about. Maybe that gets tested, and that becomes your signal for maybe going long inside of Amazon. And, didn't we break a B point with higher volume? The answer is yeah. It did all of those things out there. But remember, it's multiple patterns that you're taking a look at. And as I say, I'm just going back to the time frame of, because this one specifically, was asked about it several times on the air. Where is it that I think Amazon would be a buy? And it was at that bottom of that rising price channel. And the whole real point here, again, I'm not rushing out and saying, hey, go buy that. But I am saying you shouldn't ignore that rising price channel up there. You just should not ignore that. And it would be easy to ignore if you were only looking at the daily time frame out here. And so the message there is, if you're going to trade, you're going to make your decisions based on daily. Please go back and take a look at a weekly chart. Please go back and take a look at a monthly chart. Understand what's going on at least one level above you, maybe two levels above you, so you have a better time frame horizon on what's going on out there. So I just think that the answer is it's either found a substantially major low, which I say is a really good chance, or it is going to move lower. It's going to break that trend. And it breaks that channel line, then being long is absolutely the wrong decision. But until it breaks that channel, the right decision is to be long. So, this is Steve Rhodes. This is TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 40, S&P 9, Composite up 44, Russell's up 14 points out here. Let's take a look at a couple things. We may spend some time going to take a look at some of Stevie's correlation charts, looking for different divergences out here, any kind of clues as to what's going on in the marketplace. So if we take a look at first, let's just start off with the summation index. So let's take a look in the rising price oscillator that we have. So we know the summation index inside the New York Stock Exchange. That's what we're looking at here first. We know that ticked up on the trading session of when I saw right here. Looks like the tick up there. No, it ticked up on October the 17th out here. So that gave a change in trend. And what it's been doing here, if you look at now, one of the things that gave us the indication that a significant market bottom was being formed was we had the lower rising price oscillator down here at the lows. And that's a pattern that's been consistent for forever inside the New York Stock Exchange. So a pattern not to ignore out there. We've gone through that in great detail. Now our focus is on the price oscillator now that it's above the zero line. It's making higher highs out here. That's not Let me just say that. That's not a counter-trend bounce inside the market. That's not how counter-trend bounces are made. It doesn't have rising price oscillator out here. This tells us that you've got tremendous participation inside the New York Stock Exchange. An equal-weighted structure out here. 3,000 issues or so that are traded each and every day. A better feel for what's really going on inside of the market. It's coming from the New York Stock Exchange. Counter-trend rallies don't have rising price oscillators. It's that simple. What does have a rising price oscillator? Yeah, an initiation move. A move that's going to continue going higher out there. That's inside of the NASDAQ. Inside the New York Stock Exchange. We don't have to stop at the New York Stock Exchange. We can go see what's going on inside the NASDAQ out here, the NASDAQ out here. What does it have in place? Hey, guess what it's got? It's got a rising price oscillator out here. Its stop is, it's going to make 100% move a move. It's going to get back to that swing point from September the 19th. The low, 45.63. The high, 46.10. It's going to get back there. I don't care if it gets back there with light volume, heavy volume, whatever kind of volume it gets back there. It's going to get back there. And then makes 100% move of a move. Pretty good chance it starts to trade sideways, maybe pulls back or something along those lines, Maybe it takes a few days to get up there. Maybe things are just waiting on Janet Yellen and the Fed release minutes or what have you. And the market knows. The market was making a low, the NASDAQ composite. They talk about making a low and falling apart, but the price oscillator wasn't making lower lows. It was making equilibrium lows, horizontal lows out there in its price oscillator reading. So you put that together, NASDAQ's got several thousand issues that are traded there. It, too, was giving us a signal of a bottom. Now, did I know that it was going to form this kind of V for victory shape? No, I didn't get the paper in advance out here. I expected a major bottom. My expectation was the major bottom to form and for price to come back and maybe test that area. That didn't even happen. It was like, sayonara, out of here, adios amigos, I'm gone from this level. If we take a look at the Dow, right, the Dow has been pretty weak out here. Of the three, the Dow has been the weakest. What has it got here? It's got a rising price oscillator. So even the weakest of the three that we are taking a look at, even the weakest of the three is showing some internal strength. It's saying, hey, I don't care who the leadership is up there at the top. I'm moving higher, too, and that is its message out there. Now, if we go take a look at some of those correlation charts, some of those divergent patterns out here, I've got a slew of them. They're all really, really good. They're all good to pay attention to. But, we were just talking about the Dow, in essence, the NASDAQ, the New York Stock Exchange. If we look at the Qs out here, just to give you a feel, this is the upper portion of my screen is the equal-weighted ETF. QQEW. There might be another one out there that's got an equal weighting structure, and the lower one happens to be the Qs, right? A weighted structure out here. Usually, when the equal weighted structure shows a divergence, meaning price is traveling in a different direction than the weighted, it's a forecast of an ensuing move. That means it's been stretched inside of the non-equal weighted ETF. Does that make sense to you? Look, let's just take a look at it like this. If you take a look at the QQEW, back when the highs were being made in it, which was right around September 8th, September 5th, September 8th, September 9th, I think it was September 8th, and then the low that came in on the 19th, 18th to be exact, was making a lower high, whereas that was not the case inside of the QQQ. And then what did we see? We saw the market sell off. As the market was making a low back here on October 16th, guess what? The QQEW was not doing the same thing. It was just simply making a horizontal low of that area. There was a sign that you were going to see a change in trend. Have we seen that? Yeah, without a question. Is this counter trend bounce out there? Absolutely not. You got to go back and take a look at those charts to understand the underlying strength out there and find when the rising price oscillator was wrong. It's not wrong. It's what the market is doing out there. If we take a look at the S&P 500, if you look at its equal weight counterpart, it's the what I use is the RSP. That's the Guggenheim S&P 500 equal weighted ETF structure out here. That's the same thing as we took a look at the Qs. Quite frankly, inside the S&P, it was even clear. It wasn't like a horizontal move. It was a higher low that was being formed back on October 15th. and the market moved even lower on October 16th, but not in the case of the equal weighted ETF inside of the S&P 500. So another good indication, and you can see here right now no divergences as the market's moving higher. So you got the equal weighted stocks with inside of both the S&P, inside of the Qs out here. They're doing their share. They're doing more than their share. They're moving these markets higher out here. This is not a market that's moving higher because of Apple. It's not moving higher because of Google or Priceline or Cisco or who else maybe is in the top 10 out there, Intel. It's moving higher because all the troops are picking up any slack out here and moving higher. If we look at to look at the Dow, we have to look at the general, right? We have to take a look at General Electric. I think that's the utilities. Where's my Dow General Electric chart? It's kind of noisy out here, is it not? Is it? Yeah, here we go, right here. If we take a look at the Dow and General Electric, look at this one. Here's for the Dow. The Dow was making a lower low back on October the 16th, and if you take a look at GE, it was making a higher low. And GE, even though it's the number 27, I believe it's 27 weighting structure inside of the Dow, it's never going to move the Dow substantially. However, it's going to move the Dow substantially. How do you like that? How is it going to move the Dow substantially? Divergences. When GE is moving north and the Dow is moving south, it needs to be more than just one day out there. But when you see that divergent pattern, it's telling you that the Dow is going to play catch-up to GE. And why it works that way, I just simply don't know. I just know that it does. If we look at GE today, you can see it just continues to make a little bit higher highs. Any retracement is just a small retracement out here. So everything here inside the Dow, inside the S&P, inside of the Qs, as we speak at 10:42 a.m., that's all I can do is call the markets as at 10:42 a.m. and be willing to call them differently at 10:43, which you know that I'm willing to do that. Everything out here is suggests things are moving higher. Of course, that means we've got to check in on the VIX index out here, because the VIX index, really the last piece of the puzzle, right? We took a look at the Euro-Japanese yen. That was in the first hour. That's moving higher. That's a beautiful thing. That's all kinds of liquidity in the marketplace out here. You got the VIX index trading below the 50-day exponential moving average. That's at 1624. You're now at 1557. So long as the VIX trades below the 50-day exponential moving average, that's even more liquidity. Now, do I expect there to be maybe, some kind of sell the news or something like that? Gosh, I hope so, because that's your opportunity. That I'm talking about tomorrow. I'm talking about Janet Yellen. But what you really should be doing is going and checking out the screens, your charts, and figuring out the places where price could pull back to on a retracement for a buy into the marketplace out there. Or if you're short, you should be looking for where it is you're going to go ahead and exit those short positions on that retracement out here, because this market at this stage of the game, it's given us every signal that what it wants to do is move higher out there. And the question was about oil. I'll just go back actually to the correlation chart out here and take a look at oil, because there's a lot of chatter in the news about oil, light sweet crude, just simply controlling the direction of the market. And I got to slap my face and say, what the heck are people actually saying and looking at out here? Must be something different than what you and I are going to look at. Now, I'm not saying that there's not some type of correlation, but I can tell you one has gotten off track, and the one that's gotten off track has been light sweet crude. So we're going to see that, unfortunately. Go fill up all your tanks, go fill up all your stuff out here, because light sweet crude is going to move higher. Now, where is that chart? I know that it's right out here somewhere. There's the trend, there's gold, there's the S&P, it's the S&P and light sweet crude. So don't just go so fast beyond the S&P out here. S&P, gold miners, ES Mini. Oh, it's ES Mini. I just used the because of the two futures contracts out here. Here is the chart, the correlation chart between the bottom one is a continuous contract for light sweet crude. The top one is the S&P futures out here. Now, you can see some kind of correlation for sure, but it's not a correlation that exists. And if you take a look at this move up here, here's where I'm going to really start from. because what light sweet crude has been doing is traveling in a consolidation pattern. It's been consolidating since 2010 between the price approximately where it's at right now. Let's call it $79 and change and $111. It's been in a consolidation pattern. And if you go back and you take a look at the S&P 500, the ES Mini, through that same time period, those are the blue horizontal lines that I've got on my screen here. Has the S&P, has the ES Mini been traveling in a consolidation pattern? Is really my question for you. So all those folks that have been out there that have been saying that the direction of the markets are going to be totally in correlation to what's going on in light sweet crude, you got to ask them what they're drinking out there. Or what is it? What in the heck is it that they're looking at that you and I are not looking at? Is there some kind of directional, aspect of it? Yeah, sure. But these patterns are so completely different. You're talking about a consolidation pattern from 2004 years. The ES Mini is in no consolidation pattern, whatsoever. And then on top of that, what I'd have to do is, and then what I don't want you to do when we take a look at oil out here, is this. And I thought last week's CFTC data was pretty pronounced out here. And what it showed was the large money traders. I mean, they're getting in on the action. They believe, and I can't tell you why, but they believe that it's just no, it's gold. That wasn't gold. I didn't want gold. I wanted light sweet crude. Doesn't bode very well for me to be talking about light sweet crude and then give you a commitment traders chart here for gold. But what I can tell you, here's the commitment of traders data, which we always take a look at as a percentage of open interest, just their share as in their net shorts, basically their shorts minus their long, and come up with a percentage. And what I can tell you, if you take a look at this, I wish I could use this as a timing mechanism, but I can tell you we're right around that time. And if you take a look at the lows, if you look at the bottom of the chart out here, the times where the large money, presumed to be the smart money out here. And this means you've got to go against all of the big dollars out there if you believe the light sweet crude is going to just simply tank from here. The last time that they were down at these levels was back in 2011. Remember, we're talking about a consolidation pattern that has been out here, and there was a significant low that was put in. We have not seen a reversal candle or anything along those lines. Light sweet crude went from, I don't even know what it went from, right around the $80 level, and it made a high right around the, around the 75 level, made a high back here at about 110. Yeah, that's the kind of move that we can see. Then price comes back. What do the CFT? What do the large commercials do back in June of 2012, right around the bottom of this consolidation area? Guess what? They get to that same level of being net short. Now, in that case, we only saw a bit of a retracement. Nonetheless, it was still a pretty decent retracement. Oil went from $78, went up to $100 out there. That's a pretty good move. Well, guess what? We're now back, or not we, but the large commercials, they're back at that same net short position out here. They're ganging up. They're believing that there's going to be a significant bounce, significant bottom that is put in place here inside of light sweet crude. I can't tell you what day it's going to be. I can't even tell you what week it's going to be. I can tell you just keep poking around here for a trade, because these guys rarely are they wrong, and this is what they are. This is what they're doing out here. So that's what's going on inside of light sweet crude. Does that help Mike K? Is that what you were asking with regard to light sweet crude oil when I was taking a look at it from those two perspectives? And that was from Mike K inside of the den. He might have been looking for something else, and if so, I would be happy to answer that as well. So that's it. That's my analysis of and it's really not my analysis, it's your analysis too. We went back, we took a look at different patterns inside of the charts out here, different divergent patterns, different patterns that help us understand, what the markets are doing, the little hidden messages of the markets that help us to identify, hey, is this move real? Is it not real? And things to pay attention to. And like I say, it's 1049. That is the message as of 1049 on October the 28th. We could have a different message here at 1050, but until we get that message, this is the message that we should be focused on. This is Steve Rhodes. This is TFNN. Dow's up 40, S&P is up 9. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
I like what that last guy just said. Live with passion. Yes, that is the way to live. Let's go take a look at some things that are passionate in the marketplace here to the upside this morning. Receptos Inc. That's up a nice 47% out here. So some promising news on a phase 2 trial out here. Let's pull this back. Looks like this is at all-time highs out here. Yeah, most certainly is. No way to tell you where this thing is headed to, but you got big, massive volume behind it. It's trading out at $100 even, Steven, as we speak right now. Buffalo Wild Wings, that's having a nice morning as well, at $14. bucks. Out with the numbers beating the top line, beating the bottom line, running into resistance. So this looks like they disappointed the market right back here on July the 30th. So we'll see if Buffalo Wild Wings can get back up and get above 152.47. Volume on that downdraft session from July 30th, that had 4.2 million shares. You've done about 1 million shares so far in an hour and a half of trading. So it's coming in there with pretty good volume. It's just that is a supply line. There are folks there that want to be able to get their money back because they wrote it even from that level, 152, down to the 120-ish range out here. So they're just saying, please, let me get my money back. That's what's going on inside of Buffalo Wild Wings. Whirlpool was out with numbers as well. Whirlpool up 5%, up $8. Wow, that's a healthy-looking candle and some good volume behind that. Wow. Take a look at Whirlpool going from a low of 154 to 165. Man, oh Shevitz. How about this? This thing here is taking out a B point, taking out everything with some, looks like with some pretty decent volume out here. The swings are right around 1.3 million, 1.4 million, maybe 886, and you've done 849 an hour and a half worth of trading out there. This thing is, man, Whirlpool. Housing business is good. Whirlpool is on the move here. I'm going to put this on a weekly time frame out here. And, yeah, shoot. Man, let's see what this is doing on a weekly basis here. We're only on Tuesday. But the weekly swing that it's taking now, it's got 3.7 million or 1.9 million already. This thing is forming just an absolute huge A to B equals CD to the upside out here. I won't even give you the big one. Let's just do the small one. Yeah, we got to just do the small one out here. So if we want to know where Whirlpool is eventually headed to from a longer-term standpoint in price, Whirlpool is headed to 176. As I said, that's the small one. 190, and probably even north of that. So Whirlpool looking pretty darn good out here. WHR is the ticker symbol. Priceline, PCLN, that's up $8 this morning. Nothing huge there. Priceline has already made its move to the downside. It's now ready to make its move to the upside out here. It made that 1-to-1 A to B equals CD to the downside. Priceline ought to make a 0.618 retracement of that move at least. Right now it's just headed to the 0.382 level, 1155. It ought to head to about the 1240-ish level out there. Up also, let's take a look at something to the downside. United Therapeutics, UTHR. It's off about $7, about 5% here this morning. That's a weekly chart. Let me take a look at the daily out here. On the daily chart, really not a big deal. All it did was it just got down to the bottom of its market profile low, 121.37 out here. 883,000 shares of downside. But let's face it, this thing has a wide-ranging bar, accelerated volume on August 29th, probably has really, really strong support at 118.76. Certainly has really strong support at 90.40. But that's a gift that I don't think that the United Therapeutics is going to go ahead and give to you. So, folks, it is Terrific Tuesday. You know what that means? We've got our man Basil Chapman. He's on deck. So I would suggest doing what I'm going to do, which is I'm going to go wax my surfboard and go ride that wave with Basil Chapman. After that, we've got Daryl Martin. We've got David White. Tuesday. No, we've got the Options Hour. Then we've got Daryl Martin. Then David White. Then the Tom O'Brien Show from 3 to 5. And Andy Heck from 5 to 6. Have a terrific day, folks. Look forward to seeing you tomorrow morning. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.